Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Thursday. We're at the 6th of February, 2025, about 5:15 p.m. Central Time, doing these a little earlier this week. There isn't an awful lot to look at is the reason. The gold slipped back along with the silver, and if you'll recall, I said that I had told traders in GLD that they should take something off the table. Not that I'm bearish, but you were over the upper Bollinger Band. You seemed to be a feel there. You were just starting to wanting to correct a bit, and that is what's been going on. So while you're getting a bump tonight, I don't know that it means an awful lot one way or the other, and I'm not saying the market's turned down. I'm just saying it's ready to probably stall a bit. In the dollar index, we're up 10 points, but very quiet. Now, you did see the Bank of England went with their cut, and Mexico went really big with a 50 basis point cut and said that there's more likely to come. The market did not collapse on that news. You're going to get to the point eventually where these cuts, instead of being negative for the currency against the dollar, they're positive at some point because people will say, they're feeding the engine, they're going to create the economies going. I didn't say we're there yet, but you've got to start thinking that way in this because that's what it'll be. When I look at Japan, I still think this can go higher. And the reason is it looks to me as though they're getting very much ready now for their negotiations on labor contracts. I'm expecting 5 to 6% increase in wages. That'll give the bank, if they can get that all done in a neat way, and they do all these negotiations pretty much at the same time, well, that's acting inflationary. When we take a look at what's going on right here on the energies, they're still coming down. Now, Scott Bessent, your new Treasury Secretary, had a whole piece that came out recently, and I'm talking yesterday. And he keeps talking about what President Trump is looking at. And the president is focused on the 10-year note. He wants that one to fall. They realize the Fed controls the short term, the 6 month, the 2 year, right up to that area. But beyond that, it's market sentiment. And he says, when you see that, you'll have an idea that they've got their part going. In other words, get that market under the 4% level. And he wants to see energy prices still come down. Now, today the screws went even further on Iran, just the way they did with Russia. Now the ships that have been carrying the oil to China, they have all been put under the different sanctions, and they're going to go after the insurance companies. And it's the old playbook coming back again. And you get it to the point where this time around, maybe Iran will talk to Trump. We don't know what's going to happen there. Ukraine, the same thing. Everybody's waiting to see what will be. Supposedly in another week, President Trump will have a game plan to be talking to the allies in Europe about what he's expecting and how he thinks he can get the peace deal done with Putin. We'll see if that's true or not. So, before we go here, we should take a look and see what we've got coming out. You got the January non-farm payroll data coming out at 7:30 in the morning. This is going to be an important number, and you have another number coming right behind it. Remember, you get your revision. They do revisions twice a year on these numbers, and you find out if you've been overstating or understating. Those are going to be important, and they come out, I think, in March. But you're going to see what this number comes out tomorrow morning. Obviously, the market would like to see numbers weaken a little bit. We'll see. Wholesale inventory data will come out at 9 o'clock. University of Michigan preliminary February consumer sentiment indices will come out at 9. And the Federal Reserve will release their December U.S. credit data, and that comes out at 2 in the afternoon. I don't know. This will be the money mover in the morning. The rest of this is secondary as I view it. And we'll see just what these markets want to do with that. So as I was saying, the gold market is up right now, 1.69% going into the last day of the week. If it were to settle here, this would be a new all-time high settlement. I thought that the market could correct a bit, and you're getting that, but the pattern is clearly still bullish as can be, as you can see, and the swing lines are still up, higher lows, higher highs. Now, one of the things I've been looking for, and I made that clear yesterday, I want that 18-day average to get higher than this break low, and we're now getting it. You've just gotten to that point. So I'm not saying you're going down $70, but I am saying if you fell there, that would be the support. Got it? When I looked at the market, it seems to me that you hit these bands, you back away, and you keep going. So in GLD, what I had clients do is take some off. They've got the majority of their positions still. Well, 40%. You can trade stocks different than you can the others. And by the way, in gold, you can trade now 1 ounce, the mini contract, and the full size. So Merck's got a little bit of everything for everybody if you want to join in. It's pretty hard not to say yes to a 1 ounce gold contract if that's what you want to learn and practice with. Yeah, as you take a look here how the slow stochastics are, unless they lose that red line closing under 79, it's one thing to cut positions down when you hit a Bollinger Band. It's a very different thing to come out of your long position. The interesting part is here that when you embedded, you've never really come back to a key entry point for me, the way that I teach charting. My subscribers know what I'm talking about. In the gold-silver market, you're still staying underneath the 18-day average. So that means silver is still stronger than gold. And as we come to the chart pattern, what you're looking for in silver now is for the 18-day average to cross the 100. It could happen tomorrow. A good gain tomorrow would do the job. You're only up 4.5 cents tonight, but that would do it. And you're not embedded yet, but you can't count this just yet. So how many days do we have over 80? We had today, Thursday was over 80. We certainly had Wednesday, not the day before. So you could embed, which adds more fuel to the fire for an upside by the close of business tomorrow. So I'm getting even more bullish if the market can do that. Now, markets typically don't embed. So when they do, I take big notice of them. In the copper market, this is the resistance point. Doesn't mean it has to break from here, but this is not a trend trading move as I'm catching it. You got a lower low, a higher high. It's not like you're at the highest highs you've been. The market's formed what I'll call a good base underneath it, but it's going to need China in order to be the catalyst to get something going. And understand, you're at February 6th. Very shortly, you'll start hearing what China's going to do in addition to the things that they've made known to spur on their economy. Right now, they're probably more in a defensive posture than anything else, as real estate hasn't picked up there. And as real estate goes in China, so goes consumer thinking. And as goes consumer thinking, so goes the economy to a large degree. When you look at the platinum market, higher lows, higher highs, and you had your first crossover. See how the 18-day average just got under the 100? If we step back together here, you can see yesterday it was underneath the green. Today, it's over the green. Next up on the hit parade, can you get over the 200-day average? So this is still bullish action, a bit overbought, but that's how I'm viewing what it's doing. And in the dollar, you could sink back to the 106.75 level. We'll see what happens. Scott Bessent said today that the Trump administration very much believes in a strong U.S. dollar. Okay. They also laid out today, the president with the Republicans that showed up in the office yesterday, everything that they want to get done on these tax bills. The biggest problem that they're going to have is the House wants to do things in one big bill, which is going to be very difficult. The Senate wants to do more of a reconciliation type, piece by piece. I don't know how they're going to get all this done, and they've got the budget to deal with in a month. So all of this is right ahead of you. The courts have extended the time for employees for the federal government that got buyout offers, if you will, until Monday, as I understand it. So we'll see just what's going to happen there. But as of yesterday, I don't know what the number will be today, 40,000 people had signed up. The government was hoping to get 5 to 10% of the workforce. 40,000 is about 2%. So they've got quite a ways to go. This may benefit them if people sign up even longer, that they have longer and people change their mind for what they want to do. I don't know. And when people say, well, that's terrible what they're doing, that is not the case. Private business does this all the time. Corporations do it all the time. You think GM doesn't trim down? Ford doesn't trim down? Boeing didn't just trim down? You go to your employees, you want to take a deal that we're going to offer you? No? Well, then we got to let you go and you don't get this. I mean, that's the way that this works. Now, I'll tell you what is right now, I think, working and working well are traders that are understanding pivot points. So let me define the word working. You've got markets that are doing this. And in markets like that right now, traders look for zones that they can find a reason. On breaks, maybe they want to come into the market. On rallies, they want to sell into it. Pivot points are not about trending. They're about trading. There's a huge difference between them. Now, you can blend them to hold on to positions, but more times than not, you're looking at the center point. You're trying to sell the market above it. Those are sell numbers. Buy numbers are below it. I tie momentum to them because I think it gives you a big edge with it. I used to do just that for years, trading that back and forth. So I have a pretty good feel for it. It was taught to me by one of the best guys that I know that ever did it. He wrote a book, How Did I Take $1 Million and Make, what was it, $10,000 and Make $1 million? And he did it. Did it with a firm that I owned, Ira Epstein and Company. Back in the 80s it was. It was unbelievable. But he didn't tell you how to take a lot of money and make it into a smaller amount. Everything has its point in time, and it wasn't pivot points. He was managing too much money at the end. I mean, people were just throwing him money. We were begging him to take customer money. We had customers plowing in for it. But a big part of what he did at that point was pivot points. And I learned it. I just watching, talking to him, and he's one of the best chartists I've ever seen. All right. How do you find all this and how do you get it? Because it is a free course. Go to iraepstein.com, free offers. Just look for the free offers. It's in there, or move your cursor up here. I'm Ira. You have yourself a great day. I'll catch up with you all on the other updates tonight or see you first thing in the morning. Take care.